folks, hi, it's Mr. Intermarket Analysis, bringing you a video of the FTSE 100. Just going to do a rundown of this today. Okay, so let's start off with the video from the night yesterday. Obviously I called for a sell-off on the FTSE down to 6,700. We almost got there, obviously, based on that. Although I mean, it's been a good week, to be honest with you. I mean, I'm currently sitting on 350 points for the week on the live analysis service with subscribers, where I share my entries and exits and I give real-time commentary and analysis, which again is designed to help educate and empower the obviously the novice stroke, intermediate stroke, even professional trader. I mean, you're more than welcome to come and join me. Obviously I've been running the live analysis service for over 6 years now, and an average in excess of 200 points a week. The most I've ever hit is 700, I think it's 69 points in a week. This week currently sat on 350, last week 180, the week before plus 50. So recently it's been turbulent, but hopefully back to the normal, exceeding the 200 points a week. Anyway, let's get back to trading. Okay, so yesterday obviously I called for a FTSE sell-off based on obviously the video. If you just go through that, run through that, obviously it was predominantly based on the fact that there was weakness in the Nasdaq, Facebook after hours, etc, etc. Okay, so obviously you had a topping tail on the FTSE, as you can see in the chart there, classical reversal pattern, exhaustion pattern. Okay, and obviously we reversed, given the fact that the FTSE 250 was at resistance. So if I go back to the FTSE chart of the FTSE 250, here we go. Okay, where are you hiding again? Yeah, it's like yesterday, isn't it? Hiding again. Okay, here we go. So okay, so yes, we're still at the upper channel resistance, so that's something that we must respect. Okay, going into obviously even today, given the fact that even though the FTSE FTSE recently has been rallying, the FTSE 250 hasn't confirmed the rally. So again, obviously room to exercise caution there, and certainly be slightly vigilant with any potential long opportunities. Okay, so until that obviously breaks out and moves to the north side, personally I would always be cautious. Okay, so again, intermarket analysis giving the ability to confirm the bias, whether it's bullish or bearish. Obviously a lot of individuals out there buy the dip, buy the dip, buy the dip. Obviously they got smoked in the last 24 hours, and obviously the margin calls probably kicked in. That's why the S&P and Nasdaq got hammered as well. So anyway, we're back to normal, obviously with regards to trading. So bearish, obviously engulfing candle on the daily chart, so that's something that certainly needs to be respected. Okay, let's go to our smaller time frames. So smaller time frames are quite interesting. 60-minute, obviously I explained this concept of a H&S formation. We haven't reached a target at 6,700 yet. The low we got to was around the 6,718. So we are retesting this trend line that was obviously acting as support. Therefore will act as resistance, so look for resistance anywhere around the 6,750, 6,760. I believe the FTSE currently futures are around the 6,750 level. I have actually gone short with subscribers around the 6,751 level, obviously looking to get a good average, and look for this move to go down to test this 6,700 level on the morrow. Okay, so keep an eye. That's something that I'm certainly putting out today. Again, like I said, always do your own analysis and realize that there is a lot of risk in terms of trading futures and trading CFDs, which I personally do. Okay, so obviously you always do your own analysis and educate yourself and empower yourself. That's what I believe in anyway. Okay, so again, purple trend line, key support level, therefore now broken. Technical analysis states will act as resistance. H&S formation from here, as we know, even if we do come back up, we retest the neckline at 6,770, 6,760. Either way, slam dunk, down we go. Given the fact that the Nasdaq's weak, the S&P still weak, the Dow's still weak, obviously Euro's getting smoked to smithereens. The Aussie was strong in the morning, now weak. Gold obviously got a good clobbering, given the fact that the FOMC have left open December as a tapering. So again, like I was joking last night, taper on, taper off, wax on, wax off, risk on, risk off. So obviously oil is down as well, copper under pressure as well, given the fact that Germany, fears of German deflation. That's primarily the reason why the euro is obviously getting hit, and the DAX is obviously inflating higher. Obviously when you have deflation, talk of Mr. Nowotny today about negative deposit rates or a deposit or interest rate cut obviously helps the currency to deflate, obviously depreciate. Currency debauchery, lower euro equals higher exports, or the probability of higher exports. Hence the reason why you have the likes of the CAC, the DAX, the Euro stocks all considerably higher today. Again, I actually went long on the DAX twice today and netted in excess of around 80 points. So today that was a good trade. Okay, so going back to the FTSE, I keep digressing each and every time. Okay, with regards to intermarket analysis, folks, you could talk about the market all day. Okay, that's the beauty, because you understand the market, you realize why the market's higher, why the market's lower. A lot of traders out there don't understand, or not actual traders from my perspective, because they don't realize why the markets are going down and why the markets are going obviously up as well. It's good looking at a 5 or 10 minute chart and looking at a few MACDs and RSIs, etc. From my perspective, really it's child's play. We're looking at that type of stuff because they're all lagging indicators. I do respect everybody who uses that, because they're tools in order for you to succeed and obviously give you an edge in terms of trading. But from my perspective, intermarket analysis is a leading indicator, therefore it diagnoses price action correctly. Hence the reason why I think it excels in terms of using indicators, or lagging indicators, so to speak, such as RSI, MACD, so on and so forth. I mean, there's so many now, you just get confused. Okay, analysis paralysis, like I explained in my mentoring program, too much analysis leads to a point where you can't even make a decision at all, because you've got 105 indicators, some are pointing down, some are pointing higher. Which one do you take? So again, try and keep your trading strategy simple, straightforward, something that you can obviously adhere to and execute quickly and efficiently. Okay, a 60-minute chart, like I said, H&S formation, 6,700 is the target, which I've stated, which again is horizontal support, which makes sense. If the market does obviously start to go on a flash crash, then you do have the 6,580 level, which I've discussed before. Okay, so let's go back to the 10-minute chart now, and let's introduce a 10-minute chart rather than going back to it. Okay, 10-minute chart, here we go. Okay, this is interesting. This is the reason why I took a trade in the evening or afternoon, should I say, on the long side when the FTSE sold off to around the 6,720 level. I took a long, which obviously subscribers have access to my entries. I took a long at 6,720, given the fact that it was a lower channel support. Okay, we had an inverted head and shoulders formation, which obviously materialized, and the FTSE ended up around the 6,750 level. Although I did get out early, I mean, I made almost 300 points this week, 350 to be precise. So it gets to a point where it just becomes monotonous, and you've obviously overdosed on pips, let alone QE, and you just want to call it a day. Okay, so my usual target is around 200 points a week, which majority of times I exceed in real time, that is with subscribers. But with regards to this, obviously we pushed higher. Inverted head and shoulders neckline was around the 6,740 level. You had a the neck around the 6,720. If you project that higher, that gives you 6,760 again, which slams into the 200 MA and comes into the larger inverted head and shoulders pattern. So this is your left shoulder, this is your head brewing now. We should hold 6,760, obviously reverse back lower, create a right shoulder. Once we create a right shoulder, then we should propel higher into the 6,775 level, which equals gap fill. So that's a level that certainly needs to be adhered to and observed. That should act as resistance. Okay, given the fact, based on these comments and the DAX code propelling higher, taking everything higher with it. Okay, again, this is all hypothetical. The market is the market. Market dictates. We can't dictate to it. Okay, so this is all potential hypothetical, obviously reasoning going into with regards to into Friday's trading. Okay, folks. So just keep an eye on those levels. Okay, so obviously bearish channel there, broken to the upside. 6,760 resistance, potentially 6,740 support, gap fill 6,775. That should, given the fact that the Yanks manipulate the markets on a Friday because they want to keep their citizens happy and spending over into the weekend, more than likely will be hit tomorrow, 6,775. But do expect early weakness initially, and then eventually a pullback towards the afternoon to the 6,775 level, which is gap level resistance. The FTSE is under pressure severely compared to its peers. Why? That's what a lot of people have been asking today. The answer is simple, folks. ExxonMobil earnings hammered. Shell earnings not good. Okay, Barclays earnings recently have not been spectacular. BP has a topping tail in the daily chart. Okay, let me just quickly show you that. Where are my charts gone? Okay, here we go. So BP, there you go, folks. So this is something that I shared with subscribers. Again, like I said, I share this in real time. You have a topping tail followed by a doji today. So the BP is 10% of the FTSE. Therefore, if BP is going to fall, obviously the FTSE will fall as they move in tandem together. So that explains that. Okay, folks. So always remember: risk on, risk off, wax on, wax off. Goodbye now.